Good morning, everybody. Happy Thursday. My name is Jim Codney. I'm National Sales Director here with Western Marketing. Thank you so much for hopping on, agreeing to spend a little time with us and our partners at EquiTrust to talk about a couple real neat annuities. One that stands out that we've been using for a lot of our agents with their clients, the Bridge product, and also a brand new product that we're really starting to see some traction on called MarketFive. So I'm going to give just about 30 seconds or so for others to hop on. Some of you may have noticed, go to webinar. Takes just a minute or two sometimes if you haven't logged on. So I'm going to put myself on mute and I will be right back in about 30 seconds to start the show. Thank you. All right, everybody. Again, my name is Jim Codney, National Sales Director here at Western Marketing. Thank you so much for taking time out of what is probably a very busy schedule. I know we've got kids going back to school right now, so if you have younger kids in the house, I know a lot of us are certifying for AP or getting some of that stuff out of the way, on top of everything else going on, maybe even finishing up on last minute summer vacation. So, thank you very much for joining us today. Again, Jim Codney, National Sales Director here at Western Marketing. Today, we're going to talk with our partners at EquiTrust. We write a good amount of EquiTrust business. One of their products, they're going to talk about the Bridge product. We actually write a decent amount of. We really like that for the type of product it is. And then we're also going to talk about MarketFive, which is a really nice niche product. It's an FIA, and I'm not going to steal the thunder of our guest presenter and tell you why I like it. But with that, one quick housekeeping rule: we are here for you. We do want to answer any questions you might have. So with that, feel free to type questions in the question box. I'm going to monitor those. We'll get to those at the end. Obviously, any commission questions, please reserve those for your marketer on my team. You feel free to call us at 800-852-7152. Don't worry. A couple things. This webinar is being recorded, and you'll have access to it after the presentation, as well as I'll give you our contact information once more. So with that, I'd like to introduce our guest presenter, Chad Easton. He's the Sales Desk Manager with EquiTrust. Chad, good morning.
Good morning, and thanks for having me today. And I want to echo your first comment. Thanks to everyone for spending a little bit of time with us today. It's a busy time out there. Business is booming. Family's got a lot going on. So thanks for spending a few moments with us today. And if you're not familiar with EquiTrust, now is a perfect time to get on board. And if you're already working with us quite a bit, you know that we have a lot of exciting things going on as far as products go. We're trying some new and innovative things here over at EquiTrust, and we think the two products we're going to share today are going to really show that story. We're going to start with Bridge, which is a very unique, and we're going to keep saying new. We've been selling it for about 8-9 months, but it's new to a lot of people. It's a fixed index annuity that's got some extra long-term care benefits built into it that guarantees the client to get issued. And then we've got our brand new product, which is the MarketFive Index. Very revolutionary for the FIA space because it's a 5-year fixed index annuity that's got some great rates, and it's taken off quite a bit, and we're getting a lot of calls on that. So, and speaking of calls, if you got a pen and paper handy, I definitely want you guys to take this phone number down. This is the phone number to the internal sales desk at EquiTrust. If you have any questions after you get off the phone with us today, feel free to give my team a call. It's 866-598-3694. So if you ever need anything about product-wise, need an illustration run, or just have a random question, give my team a call. We'd be glad to assist. Without further ado, we will talk about the bridge. Even though MarketFive is our brand new product as of last week, bridge is getting a lot of attention because it's so unique, and it's there to solve a lot of problems that people need to have solved right now, because everybody knows that long-term care coverage, very important, but also very difficult to get and also very expensive to pay for. So let's talk about the bridge. Why did we put the bridge together? What's the whole concept of it? And it's simple. It's connecting your wellness and your financial goals together. Because at the end of the day, that's really important to your clients. Finance is super important because they want to make sure they have that money, to continue to live on. But they want to make sure they're doing the right thing wellness wise, to extend that life, to, age in place, live a happier and longer life. And we found a way to connect the two, to really approach it from a holistic way. And where ours is a little different is, for starters, we're going to build some LTC features right into an FIA chassis. It's going to have flexible premiums. We've got some simplified underwriting with guaranteed approval. And you're going to hear guaranteed approval a lot, or guaranteed issue. We have 3 underwriting classes. One of them is called secured. If you don't even want to bother with underwriting, you just want to get in, you're automatically in with secured. We have the wellness program, which we'll get into. It's more than just a checking in with somebody that can tell you to eat an apple or jump some rope. It's way more in depth, where it's a wellness program to really help extend the client's life and give them some value and some things that can be helpful. But at the end of the day, it can actually give them some more credits to their benefit base too, which is great. It's an indemnity claim process, so we're not making people chase down receipts. If you're using it for long-term care needs, go for it. We're not policing it. And then the custom LTC benefit, one size fits none. I love that line, because when we get into it, the product can be a little bit confusing at first because it has a couple new terms and it has a different approach, but the flexibility in the product of being able to lean heavy towards LTC or lean heavy towards the annuity, and how that affects your benefit and the cost to it, a lot of flexibility built into it. The charge structure is pretty nice, as we'll get into, and it's a completely digital process. No paper apps. You're going to do everything via the Bridge microsite, and the underwriting is via video. It's a very streamlined process to get it going a lot faster and hopefully make it a lot easier for you. So let's talk about the Never Stop aging opportunities, because it's the Never Stop program. That's the additional program on top that's going to help them get those benefits for successful aging in place, make it accessible to everyone, that has a goal to, prevent, treat, and adapt to what they're dealing with as far as their health goes. And the Never Stop Wellness program is a very beneficial program if they want to jump into it, because not only does it help them, live a healthier, more comfortable life, it actually gives them some benefits on the back end to help that benefit value. So the first term that might be kind of new to you, if you're not super familiar with Bridge, is what we're calling a coverage ratio. And the coverage ratios can vary. We're just giving you some examples here at certain ages, but it goes from all the way from age 55 to age 80. And these are our 3 underwriting classes. Secured, that's the one, no questions asked. You want the contract, you want to skip underwriting, we're going to throw you into secured. Standard, you're going through the basic underwriting. The client's not at the most tip-top health, but they are pretty good. They're going to get the standard rating. And then the preferred, you go through the underwriting and they say, hey, you're at top of the class health-wise, we're going to give you the best rates. And then we go over to the max coverage ratio. And when you're thinking about this contract, the first thing to think about, if you've ever sold an annuity with an income rider, the setup is very similar. Like I'm in the process of training a new employee right now. And what I do is the T chart. I say, draw a big T, and then we're going to have our accumulation value on the left-hand side. Then we're going to have our benefit value on the right-hand side, and we're going to go from there. So think of the left-hand side, that's your annuity portion, and think of your right-hand side as your long-term care benefit portion. And what the coverage ratio means is, once you give us the premium, your coverage ratio is going to start at a percentage point higher than your premium. So for example, the best that we can offer is a totally healthy person at age 55 that gets preferred. They technically could start with a coverage ratio of 325% of their premium. So if you give us $100,000, their benefit's going to be starting at over 3. And then it varies from there. And the great thing about it is, depending on your client's age and depending on your client's underwriting class, you can actually pick the coverage ratio you want. There's going to be a range. And you might be asking yourself, well, why wouldn't I pick the top one? Why wouldn't I want the most? Well, once you get into it, you're going to realize that, much like most things, the bigger benefit, the fee is going to be a little bit higher. So you keep that in mind. How do you want to balance the fee versus how much benefit you want to start with and build on going forward? So max coverage ratio is definitely a term. If you're not familiar, jot it down. We're going to be talking about it quite a bit today. But the one thing to remember is, depending on your age and depending on your underwriting class, your client gets to a range that they can choose which coverage ratio they want to pick, and that coverage ratio determines how big of a pot they're going to start with, and it's also going to determine how much it's going to cost going forward. The details, the down and dirty details. This is a little bit different if you're familiar with our products, because we're only issuing it, ages 55 to 80, and it's only going to be non-qualified. So no qualified money, and we got to have at least $50,000 to open it. With the thought being, to make this thing worthwhile, $50,000 is a good starting point. $10,000, like the rest of our premium, probably not the best amount to start out something like this with. You need a little bit more because we're going to be paying for a lot of stuff on the back end. But it is flexible premium. You can go ahead and just keep adding to it if you would like. The FIA side is a 10-year surrender charge, so pretty basic. You're going to have free withdrawals after the first year on your FIA side. And the accumulation value has its standard potential. We got our index accounts and our fixed accounts that you're used to with the normal EquiTrust products, and then we have our flexible benefit base. When we say flexible benefit base, it goes back to that coverage ratio. You get to choose where you want to start your benefit base at, which is nice. And even though this is a completely online and digital scenario, we do have PDFs that you can order. You can see here on the right-hand side, you can get some stuff online and download if you want some things to hand off marketing-wise to your clients. We do have some stuff on the website. So let's talk rates. Rates, that's what everyone's talking about here today in the business. I mean, we're really working with the increased rates quite a bit around here. If you're not familiar, we increased our rates on our MIGAs last week. And so we're doing really good with the interest rates, and we have a really good renewal rate history. If you're not familiar, we've got some pieces on the website that we'd love to get in your hand sometime that shows the really good renewal rate history. But the current rates for this particular one, for Bridge, we're showing what the rate is and then the illustrated rate. And the illustrated rate is, okay, we're running it now. We're figuring in, current rates, caps, what fees and whatnot. So definitely, very respectable rates right now, especially, a great 5-point fixed bucket is nice. But as far as the annual point-to-point goes, the S&P 10%, very similar to the other contracts we have. And so we might not give you quite as many to go into, but the ones we have are the same ones with our other contracts. So if you're familiar with them, it's not quite as confusing. So riders. Standard nursing home and terminal illness rider, those are automatically included just like all the rest of our fixed index annuities. You don't have to worry about paying for it. And the standard, I've been in the nursing home X amount of days or can't do 2 of 6 ADLs, standard stuff. Where Bridge differs, it has technically 2 riders on it. The one is the long-term care rider that we're going to be talking about today. And keep in mind, both of these riders, when you open it up, they're automatically included. The long-term care rider, that is the rider that's focused on your income benefit, that exclusion ratio equation. You're going to have to pay for that. In the first year, there is a 1% premium load, but it's only in the first year. So if you happen to be somebody that wants to add some premium down the road, you're not going to get hit with that load only in the first year. And then the premium is based off the monthly charge is based off the net amount at risk. And we're going to get to that. But the net amount at risk, all it is, it's the difference between your LTC benefit base, so your big bucket that you want to pay LTC with, versus your accumulation value. Because remember, we're automatically starting you out and the client out at a much higher value on the benefit side, much like an income rider. And the difference between those two is how we're going to calculate the fee. And we'll get into that a little more. But just remember, it has the standard stuff for nursing home and terminal illness, but the LTC rider is automatically included, and it costs 1% for your premium, and then it does have a monthly charge, but that's why they're buying the contract. They're not here strictly to go all in on FIAs, right? So that's pretty standard stuff, and they should be expecting that. The Never Stop Wellness Rider is also included. It's cheaper. It's $100 a year, and this is the program where they can work with their personal health assistant, get some goals, go do a few things at the doctor, like take a yoga class, get hearing aids tested, things of that nature. Do a few things through that program. It's going to give them extra benefits added to their long-term care benefit. It's $100 a year, and it's added automatically. If you got a client that's not going to do all this extra Never Stop Wellness stuff, you can remove it, and we just move on with our day. But the long-term care rider is it's the main event of why we're here. But I don't want to sell the Never Stop Wellness rider short, because we're going to show you some numbers here, some kind of case studies. And the clients, if they do what they're supposed to do through the Never Stop Wellness program, can get a good chunk of additional funds to add to that benefit. In the rider, why we're here, long-term care rider, it's there for what it says. It's designed to cover those LTC expenses. The rider is going to pay that benefit versus that benefit base. Like we said in the beginning, your client chooses the initial value they would like to start at with their coverage ratio. It's based on that issue age and their risk class. But one thing to take note here, there is a maximum 1-year LTC coverage of $1 million. That does not mean we have a maximum premium of $1 million. That means we have a maximum LTC coverage of $1 million. So if you have somebody that is young and super healthy and they want to start out at that much higher coverage ratio, we have to keep that in mind, because if you give a 55-year-old that wants 325% coverage ratio, can't give us $1 million because they're way over that for their benefit. So it's a little different. You're used to a $2 million cap on annuity premium with us. With this one, it's the LTC coverage in year one can't be over $1 million. So it might take a little bit of math to figure out if somebody wants to give us a whole bunch of money. So a long-term care rider, the features of the rider. So if we go back to my concept there, that we have a T-chart, we have our FIA accumulation value on the left, and we have our long-term care benefit rider on the right. We started at that higher rate of the coverage ratio, and now it's going to have a 2% annual compound roll-up. So now we're guaranteeing growth on that income value, on that benefit value, much like the income rider. Remember, net amount at risk is the difference between the LTC benefit base and your accumulation value. And the NAR, we call it the NAR to short, just what you need in your life, another acronym, I know. But the net amount at risk technically has a 4-year vesting schedule. So think of it like it's like a bonus. Some contracts, depending on your carrier, might have a 4 or 5 year vesting schedule on your bonus. It's very similar to that. And so the NAR vests over the course of 4 years. But once it's vested and it's time to take out the money, you take your vested NAR plus your accumulation value, which gets us back up to our benefit value, and then we take that over 60 months. So you get monthly payments over 5 years, which is nice. So at the end of the day, you're using the NAR in that vesting schedule to figure out what that fee is going to be. But when it's time to take the money out and start paying for long-term care coverage or a wheelchair ramp or anything of that nature, it's that huge value. It's the benefit base of what we're taking it off of. I find this slide can kind of be confusing to some because we're explaining the vesting schedule. But if somebody sits on it for more than 4 years, like they technically should, and everything's vested, you're taking your top benefit value, long-term care benefit value, and dividing by 60, and there you go. This is one of the highlights. It's like, well, how are the benefits accessed? Easy. Doctor certifies that the client can't perform 2 of 6 ADLs, or they have some sort of a cognitive impairment, and the doctor has some kind of plan of care. So that, okay, we're diagnosed you with this, and here's what we're going to do go forward. The client's a U.S. resident. All right, send us the information, and it's time to start cutting checks. The benefits are indemnity based, so you're not going to be chasing down receipts and whatnot. You're getting a check, spend it on the LTC stuff. Every year though, the agent will have to the client and their doctor will have to recertify that they need to continue the benefits, because if they got better, want to make sure that they're not still getting the money if they don't technically need it. And if you're playing by the IRS maximum per diem rules for LTC stuff, there shouldn't be any tax implications. Some of the advantages we like to say is about, we're considering it's the state-of-the-art underwriting. It's simple, low friction, it's fast. It takes less than 30 minutes if it's done right. The great thing is we're going to approve everyone for LTC benefits no matter what. So everyone can get that secured no matter how bad their health is. But keep in mind, if you think about it, the secured, I'm going to pull something over really quick because I don't want to have to click back. If you look back at secured, okay, well, a 55-year-old that's super healthy got 325. Secured is only 150. But at the end of the day, even down to the oldest person, an 80-year-old with the worst health, if you give us 100 grand, their benefit base is going to start at 125. So no matter what, we can get someone in and we can get their benefit base higher than their premium amount. So guaranteed issue, guaranteed approval. From what I hear in the field, that statement alone is going a long ways. We don't bother looking at the medical or prescription records. It's a five pre-screening questions. There's a couple of knockouts, and then there's a video conference you go through with the underwriter where they make you stand up, lift your leg, and do things of that nature. The great thing about it is it's designed to really kind of remove the bias from human judgment. Who knows what happened that the underwriter for a life contract or something, they might have had a bad day, fought with the spouse, or had a terrible breakfast, and they go into the day in a bad attitude, and then they're doing all their underwriting. There could be some bias in there. This eliminates that because we kill off all the records. We don't need those records. We just have a couple knockout questions, and then we have someone take a look at you. Very easy. So I said we were going to have some case studies. So David's going to be our hypothetical for somebody that's ready to rock and roll with some of the higher potential for the product. He's already retired. He's got 3 grown kids. He wants to live independently, just like everybody else. My dad's 80. He's going to stay in that house as long as he can, right? That's how a lot, people want to age comfortably in place. Doesn't want to lose his money, but doesn't want to get stuck sticking the kids with a nursing home bill. So he's going to give us 250 grand. He was considered preferred. And instead of the coverage ratio of the max of 325, David chose 315. So your eyes are not deceiving you. David, in this scenario, starts his contract out. He's got his annuity side, starts out at 250,000. His income benefit base starts out at $787,000 and some change. So right away, young, healthy, high coverage ratio, they can start out with an insanely large amount in their benefit base. But like I mentioned earlier, the larger the benefit base, the larger the charge is going to be. And so that works into the flexibility. How much is your client comfortable paying for a larger amount? His story, he's diversifying, through his portfolio. Like a lot of people wondering, do I have it together? His father and mother, his father's still alive and mother's deceased. He could probably afford the LTC if he needed it, but did he want to lose money or be a burden to the kids? No. So the potential solution is, well, we got bridge. We can check the boxes here. The fixed index annuity is going to make sure he doesn't lose all his money. We've got some science-based personalized wellness and a long-term care rider. So David's taken the steps to protect his money, protect his health, and then set himself up for success when it's time to go into a nursing home or maybe assisted living, or he just wants to do it at home. The aging plan, this is where the Never Stop Wellness program really shines, because you work with somebody at Never Stop and they will put an aging plan together. For example, this is a sleep, hearing, and stress reduction plan. He's been stated, or they've suggested for sleep health, use this app called Calm. It helps with wellness to help with your sleep. If you participate for 2 hours a week, you qualify. Got tested for hearing aids on an online screening. Decided I need new hearing aids. I'm going to be testing once a year as we go forward. Qualifies for successful aging hearing. Stress reduction. I'm doing yoga for relaxation, things of that nature, doing it 2.5 hours a week. So this is a plan tied just to David that they worked with the Never Stop Wellness program. And if David does these things, he's going to get some additional benefit added to his value. And that's over here on the right side. That little green box is his Never Stop Wellness credit. So based on what he just did, he got that extra money. So we're at the end of the 10 years. The 2% grows. The 2% grows for 10 years, and then it turns off once you turn it on, much like an income rider. So after 10 years, David gave us 250 grand, if you remember. He's got a benefit base of 959. The Never Stop Wellness credits was almost another 70, pushed him over $1 million. Now he's getting checks cut to him for 60 months, 17 grand a month. Unless Dave is living in an iron lung, I think $17,000 is going to be good to cover his benefits on a monthly basis. But once again, this is one of the extremes towards the higher. David wanted a higher benefit exclusion base or coverage ratio. Excuse me, I'm stumbling over my words. But it plays out for him in the long run. So where you can find some opportunities, 1035 exchange from annuities or life insurance, send them our way. We'll take it into the bridge. Someone that's got some money, kind of sitting on the sidelines in a money market, checking, savings, or CDs, wants to get potential a little more action out of it or to help plan for their retirement. But mostly this is what I'm hearing about. Clients previously uninsurable for traditional LTC. Most of the calls I get in here are tell me about the guaranteed insured. And we get people sometimes that are turned down from LTC from one company and they're getting standard over here. So it really depends. And I think there's a lot of opportunity. It's an alternative to traditional LTC because we already discussed at the beginning, that's way too expensive and nobody's selling it anymore. A lot of companies, you have to be in perfect health and cut a fat check if you want to get into their program. And this is a great conversation starter for annual reviews. You're sitting down with your clients, maybe they just retired or maybe they just had a big birthday or something. You're sitting down like, hey, what's next for us? Have you heard about Bridge? What are you doing for your planning for when it's time for assisted living or aging in place? Well, now you got something you can talk about. So this is a great annual review product to bring up. So one thing I do want to remind you, we are dealing with long-term care, so some states require a health license. Unfortunately, I don't have all those memorized right now, but we are giving you a reminder. Definitely go check with your state, check your CE requirements, and check your state variations to see if you need accident and health. Like here in Iowa, I need to get I have a life license, but I have to get an additional accident and health one to deal with long-term care. And also make sure you've done your EquiTrust product training, because if you haven't written with us in a while or you've just been doing the standard products, there's a chance that you might not have completed your product training on this one, and we want to make sure you get through that before you start writing it. Okay, Bridge microsite. This is the completely digital, electronic way we're trying to do this. Everything from marketing materials to illustrations, licensing, everything can be found at agents.equitrust.com/bridge. If you do want to, print out some of those marketing materials, you definitely can, but we're really trying to make this as easy as possible digitally. And we're running a special. We have a 1% commission special going on right now. So if you write a Bridge right now till the end of the year, you get an extra point on your commission. But we have this new thing called Bridge Bucks that states that if you submit an app, we're going to give you an extra $1,000, and then if you submit another one, we're going to give you 15. And if you do another one, we're going to give you a 2. And so we're offering an additional $4,500 on your next 3 issues of Bridge for limited time offers. So that's going to be going. The contracts have to be issued through January 31st, and we'll be doing this till the end of the year. So have any questions, let us know about this. But little incentive to maybe give bridge a shot, because if you're one of those folks, maybe you're used to paper apps and you finally took the plunge to write an electronic app. That first one's tough. The first time out of the box for something new is going to be tough, just like your first time talking about bridge is going to be tough, or running the e-app for bridge. But once you get over the first time hump of the newness, I think you're going to really love what we got here, because it's very unique. It's very flexible, and we're going to be able to help a lot of people with this. Sometimes, that is one of the things that sometimes gets missed in our business, because we're so focused on driving our business. We can help them more than just saving for retirement. We are helping them with their health on this one. So it's really a holistic approach, why we're so excited about it, because you can have a little bit of a different conversation than you're used to having. You don't have to talk about interest rates and bonus and surrender charge. We're talking about health. We're talking about, hey, do you want to age comfortably in your own home instead of going to a nursing home? Who's going to say no to that? All right, so I'm gonna take a little bit breather, because man, bridge is a whole lot to take in. It's like drinking from a fire hose when it's brand new. So we're gonna take a quick breather, and then we're gonna get into the MarketFive index. Now, MarketFive, brand new, launched last week. We're getting a ton of phone calls on it. Why? It's a 5-year fixed index annuity. There's not a whole heck of a lot of those out there right now, and it's got some great rates. And if you're not familiar with the EquiTrust product line, it's essentially the little sister or little brother to the market value. Market value is our standard 10-year contract that has no bonus. It's never had a bonus, and it's our accumulation product. And some folks might scratch their head, really, with no bonus? Well, this is one of our oldest products. We've had it for 20 years. We've priced it I don't think we could have priced it any better if we tried. If you took out a contract, let's say you took out a contract 20 years ago and you still had it, your caps and rates haven't fluctuated more than 1%. And it's because of that real conservative pricing that we do, but also we're not big fans of teaser rates. We like to know what we're going to be in for the long haul, and you can count on EquiTrust for being there. Are we going to have the tippy top best rates and bonuses? No, we'll never be at the bottom. We're always going to be, above average, but there's consistency. When you buy an EquiTrust contract, you know what you're getting. The client, you're not going to have that tough conversation in year 3, like what happened to my interest rate or what happened to my cap. It just doesn't work that way at EquiTrust. And this product is a byproduct of that. Market value on a 10-year chassis works so well with no bonus. We whittled it down to the 7, and now we've whittled it down to the 5. You got flexible premium for the life of the contract. It's only going to take you 10 grand to open it. And we're going to issue this up to age 90. It's 5 years. So we have a lot more wiggle room of who we can work with. Like we said, 5-year surrender charge period. You're going to get the full value at death. You get your 10 points for free withdrawals after the first year. And even if you get a big fat goose egg for several years, we're going to guarantee 105% accumulation, meaning at the end of 5 years, if you haven't at least made 5% on that, we're going to give you 5% on your way out the door. So there's a little bit of a guarantee built in. We got a nursing home waiver rider, but hey, remember, that's only to age 80, and this issues up to age 90, so you got to be cognizant of that. And then we got our terminal illness rider. That's pretty much it. This half is going to go really quick because it really is that simple. 5-year fixed index annuity, no bonus. Here's the strategies and the illustrated rates. We got 5% for a fixed rate, our S&P annual point to point at 10%. That's pretty common right now. And once again, illustrated rates is we're figuring in caps, fees, and whatnot if we ran it today. So definitely very respectable numbers. But there's not a whole heck of a lot to the MarketFive index. It really is in and out. It's a great stepping stone product. Maybe somebody is just retired and doesn't necessarily know what they want to do with it, but wants to plant some money somewhere for a short period of time. I mean, there's a lot of different things you can do with this because it doesn't tie those clients up, and it's got a little bit of a guarantee, which everybody likes, a guarantee, right? So issue age now, we now have a MYGA alternative for those over age 85. There's some folks out there that are 85 and older, they might not want a MYGA. Well, now we got a new product for them. The strong accumulation rates. I'm gonna put the challenge out to anyone on the call here today. Give my team a call Ask for an illustration. You won't be disappointed. We have the guarantee of the 105% accumulation value at the end of the 5 years. So if nothing happens, you can walk with at least a 5% gain. And the commission is very competitive. I think all of our commissions are very competitive. This one is as well. And that's it. I told you the Market 5 was going to be super quick. There's really not much to it. If you know the Market 7, you already know it. And even if you don't, it's just a few bullet points. 5 years, guaranteed to grow 105%. Free withdrawals, $10,000. Pretty standard stuff. But that is a hot topic right now. These are our two hottest products right now because they're the newer ones. And they're just new concepts. MIGA, we're still doing a heck of a lot of MIGA business, but these are different animals and people are starting to gravitate towards the different animals. So we're very excited to have the conversations. So that's what I had. If we have some questions, I'd love to go through them.
Awesome, Chad. Thanks. Yeah. Folks, we've got a couple questions in right now. Now's the time if you do have questions to ask. Chad, I just want to add a couple little things. First of all, on the bridge, we work with a lot of agents that are talking to their clients, and most of our agents are health agents. So they're talking about, medical costs, et cetera. And unfortunately, as many of you know, these clients sometimes can't qualify for that traditional long-term care. And to compound their issue, now we have states, and this list is going to grow in the next couple of years, that are requiring them to have some sort of LTC coverage. So they're getting pressure from both sides. And so one of the great things we like about Bridge here at Western Marketing is that it honestly is a take-all-comer product, right? There are a couple other LTC indexed annuities out there, but they're accept or reject. And where Bridge really stands apart, they're competitive with those other two products that we offer, but Bridge also will take all comers. So you don't have to sit down when you're talking to your clients and worry about, will they qualify for preferred or standard? You don't have to worry about that. You go through the process and you put them in the basically the underwriting class that's right for them. So that's the first one. On MarketFive, one of the things we like, honestly, folks, is nobody knows where the market's going nowadays, right? It's up, it's down, it's left, it's right. It's frankly scary to some people. So what I've found talking to a lot of our agents is that their clients are looking for a shorter term for somewhere to put their money, right? They want to get it, out of the coffee can or out of the bank, or maybe have better opportunity than what a lot of CDs offer. Because remember, this is non-qualified money we're talking about. Put that to work for them, but they don't want it locked up for 10 years because they may want to invest that in other avenues sooner than that based on all kinds of things. So MarketFive is a great short-term 5-year FIA for that. So now, Chad, we do have a couple questions. The first one I'll answer. Basically, Marvin just asked if this is being recorded. Yeah, folks, this is being recorded. It will be available. So we're going to send you a follow-up email. And if the recording is not linked, because sometimes the recordings take a while to populate, just feel free to respond to that email if the recording link's not in there, and ask for it, and we'll gladly get that out to you. Now, the next question, Chad, Gary asked, because it's a flexible premium product, meaning, you can add multiple premiums through that first year. But what he's really asking is, when does the surrender start? Does it start from day one, or does it start from the date of the last deposit?
Okay, I'm not sure which product you're referring to, but all of ours start
on Bridge.
All of our products start day one. So if you add premium, we're never going to extend a surrender charge.
All right, there you go. Gary, let me know if that answered your question. I think it did, but just in case. And then Robert was asking if you by chance had the 5 knockout questions, for
Yeah.
bridge.
Yes.
If not, we have them. But if you've got them and want to go over them, that'd be great.
Yeah, hang tight. Let me, I don't have them in front of me, but I
Sure.
can get to them really quickly here. All right, hold on. 1 second. All right. Was there any other
And
questions while I was looking for it?
there isn't so far, but I was going to just jump in and say, well, Chad's pulling that up for you, Robert. You know, the neat thing about bridge is, yeah, there's 5 knockout questions, but it's a take-all-comer, meaning secure takes. It's basically a guarantee issue product. So, well, it changes their underwriting class, it'll still take people. So just keep that in mind.
All
Go
right.
ahead, Chad.
Yeah, I found it here. So here's the 5. Do you currently live or receive care in-house, or have applied or been advised to reside in a nursing home, assisted living facility, or any other residential care facilities, adult daycare, that sort of thing? Do you currently need any sort of assistance or supervision performing some daily activity living? Ask if you use a wheelchair, scooter, respirator, and then it asks if you've ever been diagnosed by the medical profession by a set of things, and these are like angioplasty, COPD, chronic, and it lists them all here. And then in the past 5 years, have you received Social Security disability benefits? And if you say yes to one or more of the first 3 of 5, that knocks you down to secured.
Yeah. So, Robert, hopefully that answers your question. Again, the good news is, regardless of how they answer those questions, they're going to qualify for some coverage.
Exactly.
Now, if they answer yes, they're going to be secure, but they're still going to have coverage, which is not offered on the competitor products out in the market on an FIA chassis with LTC that I'm aware of with any product. Also, again, if they have those health questions and have to answer yes, they also aren't qualifying for traditional LTC or much other underwritten health products. So what Bridge does is it allows you, regardless of your customer's health situation, to offer them an LTC benefit, which is really the goal, right? Because,
Exactly.
you know, I talk about retirement and everything, and one of the biggest factors facing seniors isn't outliving the money. Yeah, we think about that because of longevity, but it's actually their healthcare costs as they get older, because as we age, catastrophic health issues are more likely, right? We're at a higher percentage of chance to need a long-term care policy. And that, honestly, folks, is where the Bridge really shines. It's a competitive product even without that, but when you add the fact that we can help every one of our customers with the Bridge, as long as they have that $50,000 in non-qualified funds, that's really where it shines. So hope that answered your question, Robert. Chad, it looks like that's all the questions. Is there anything you'd like to leave us with before we end the webinar?
Yeah, just again, I want to tell you the phone number to my team, 866-598-3694. If you have any questions, give us a call. We love to talk Bridge, pretty much anything with you guys. And I wanted to kind of just support your statement at the end about, hey, secure is something, because if you look on the right-hand side, all of those percentages are over 100%. So no matter what health you're in, you're always going to be approved, and you're always going to get at least a little bit bump in your benefit value. So you not only get approved, but you get kind of a little bonus too. So it's kind of nice. But at the end of the day, whatever you guys need, give us a call.
All right. Thank you, Chad. And folks, you know, if you need any help with any of this, have any questions, you know, call me and my team, and we're happy to help you. We also, on our agent portal, recently have added the Annuity Resource Center. It's going to have a bevy of of items that you can walk through. And I believe we just sent out an e-blast on that yesterday with a walkthrough on how to do that. But it actually has a place for you to download a fact finder. It has a place for you to request an illustration online. So if you're meeting with a customer and you want help with an illustration, you can submit that whenever it's convenient for you. And typically by the end of that next business day, you're going to have a response from our team with an illustration, and we'll go from there. So with that, just a reminder, my name is Jim Codney. I'm National Sales Director here at Western Marketing. I also lead our life and annuity team. If you have additional questions, please feel free to give our team a call at 800-852-7152. Again, 800-852-7152. So with that, thank you very much, everybody. Make it a great day.